Crypto-focused bank Silvergate announced on March 8th that it would wind down its operations and plans to repay all deposits in full.
Silvergate suffered a liquidity crisis, so over 90% of their deposits were affiliated with crypto firms. And so once crypto melted down, of course, there was essentially a run on the bank.
Silvergate was founded in 1988 during the peak of the savings and loan crisis. The bank ventured into crypto in 2013. Here are 3 key things to know about the company's unwinding and what it means for the crypto industry and beyond. First up, Silvergate's problems are linked to the collapse of client FTX, which filed for bankruptcy in November 2022. The bank had been facing criticism from lawmakers and growing regulatory pressure from US banking watchdogs for allegedly failing to catch suspicious transfers between FTX and its sister trading firm Alameda. The announcement to shutter Silvergate's operations came roughly a week after the company said it would have to delay filing its annual 10-K report due to questions from its auditors.
It's also apparently has to repay the FHLB some of the outstanding loans that it took out to basically cover for the crypto sector last year. The forward-looking statement section was, I think, one of the most interesting, though. Among the other things that it said it has to face inquiries from Congress, questions from bank regulators, and possible inquiries from the U.S. Department of Justice, suggesting there is a major probe of the bank and its operations ongoing. It concluded in the forward-looking statement section by saying that its ability to be a going concern for the next 12 months may be in doubt.
Following the downfall of FTX, regulators have also been raising concerns about traditional banks' crypto exposure, leading them to rethink any exposure to the crypto sector. In February, top regulators warned banks about liquidity risks related to cryptocurrency deposits. The push from banking regulators is part of a broader crackdown that threatens to sever digital currencies from the real-world financial system. In a press release, Silvergate said, "In light of recent industry and regulatory developments, Silvergate believes that an orderly wind-down of bank operations and a voluntary liquidation of the bank is the best path forward." Second, Silvergate shuttered its flagship product for transferring dollars to and from digital assets on March 3rd, after a host of crypto firms jumped ship. Silvergate differed from traditional banks because it catered to companies in the crypto business. It helped institutional investors move dollars in and out of crypto trading platforms around the clock through its Silvergate Exchange Network, or SEN. In response to Silvergate's delayed 10-K filing, Coinbase, Galaxy Digital, Crypto.com, Circle, Paxos, and others all said they would stop using the SEN transfer service. Coinbase is now using Silvergate's rival signature bank, SBNY, for dollar payments. In a tweet, Coinbase said it switched out of an abundance of caution, adding that it had minimal exposure to the crypto-focused bank. So what does this mean for other crypto-friendly banks? Both of Silvergate's competitors, Metropolitan and Signature, were already pulling away from the sector even before the debacle. Metropolitan said in January that it was getting all the way out of crypto. Signature said it was going to get rid of $8 billion to $10 billion in digital asset-related funds in December.
So if you look at Signature's balance sheet, their crypto deposits have been in, call it, the low double digits. So they're probably in a situation, given the liquidity of their balance sheet, where if every single crypto customer came and took their money out, they still have more than adequate liquidity.
The bigger problem, I think, that the industry is going to have, the crypto industry is going to have, is most TradFi firms operate under a fiduciary rule. That means now after this failure, on top of everything else, it's a career risk for any traditional financial firm to put money in crypto.